Yeah, I mean, we expect something that's probably under $50 billion. That's what we get when you look at sort of the outlook, the growth outlook for the company going forward. One of the things that will help in terms of pricing for the IPO and the trading afterwards is scarcity value. The float is smaller, I think, than what we might have expected 2 or 3 months ago, and people do want a piece of it. So that could, provide some valuation upside.
When you do the CSI on this, Kirk, are you surprised, because some analysts have been surprised or are surprised, that ARM did not provide trailing 6 to 8 quarter financial statements in their filing, which is usually what happens?
Well, I mean, we were a little disappointed, but we do have financial information, at least, the basics provided by SoftBank as part of its segment reporting. So I don't think that there's anything going all the way back to when ARM was last a public company where we feel like we're missing vital information.
Okay, fair enough. In terms of R&D, obviously they need to continue spending, but are you concerned, as some other analysts are, that R&D spend is going to have to remain structurally higher because of what is known as the multi-end market focus that ARM has now decided to focus on?
That's certainly a risk. When you look at where ARM was at back before SoftBank bought it, like he's mentioned, there was fewer sort of, target markets for them to address. I think arguing against that, and one of the reasons why we feel, somewhat confident that margins can hold up is, they collaborate, a lot with their downstream customers. Those downstream customers now represent, half of the semiconductor industry overall. So we do feel, feel is what I was going to say, they do. They do have a pretty good feel for where the industry is going.
Pretty good feel for where the industry is going. This stat, which I just came across, astounded me. 70%, roundabout, 70% of the world's population interacts with ARM-based products. 99%, almost all cell phones use ARM-based chips, right? But the direction the tech is going, it's going away from low power and lower end gadgets into things like AI, machine learning, et cetera. Is this going to be potentially to ARM's detriment, do you think?
Well, I think it's the opposite. I mean, when you talk about, such a large portion of the population touching ARM products, that, implies that there's not much more room for them to grow. And then we think that that's not quite the case. A lot of the growth expectations are in things like, data center and cloud compute. I know generative AI has gotten a lot of play, of course. That's really what's driving the timing of this IPO, probably. But, that growth in that area won't really impact any of the statistics that you had mentioned before. It's the real sort of, relevant measurement is when they look at their addressable markets, they have about 47% market share. And they expect that to grow. And I think, with their sort of low market share in areas that are growing the fastest, that is a positive aspect for them. So again, this is cloud compute and automotive, where they believe that their market share is around 10% to 40% respectively.